Selling in Portugal? Here's what you need to know about Portuguese VAT rules. Hi, I'm Richard Kupchak, co-founder and CEO of Safari Star. In this video, we'll be looking at the key VAT requirements in Portugal, when VAT was introduced, who needs to register, the standard rates, the registration process, and the risk of non-compliance. Portugal introduced VAT in 1986 when it joined the European Economic Community. The standard VAT rate is 23% on mainland Portugal. A 13% reduced rate applies to certain foods, restaurants, and cultural services. A 6% super reduced rate applies to essentials such as bread, milk, books, and medicines. In Madeira and Azores, a reduced local rate apply of 22%, 12%, 5%, and in Madeira, an 18%, 9%, and 4% in the Azores. Portuguese businesses must register if their taxable turnover exceeds €12,500 per year. EU businesses selling to Portuguese consumers must register if they exceed the 10,000 EU-wide distance selling threshold. Non-EU businesses storing goods in Portugal or selling directly to Portuguese consumers must register immediately, as there is no threshold. Now, when it comes to fiscal representatives, non-EU businesses are required to appoint a fiscal representative in Portugal. EU businesses don't need one, but may appoint a local tax agent for compliance support. To register for VAT in Portugal, you typically need to have your company corporation documents, proof of your trading activities such as contracts, invoices, or marketplace agreements, and the identification of your directors or owners. Registration is done through the Portuguese Tax Authority and usually takes 2 to 4 weeks. Once approved, you'll receive your Portuguese VAT number or the NIF number. Now, looking at filing and compliance in Portugal, VAT returns are usually filed quarterly. Larger businesses or those with higher turnover may be required to file monthly. An annual VAT return is also required, and returns are filed electronically through the online portal. As always, there are risks associated with non-compliance. For example, failure to register or late registration can result in backdated VAT liabilities, penalties, and interest. Penalties for late filing or payment can reach €3,750 per infringement plus interest. Persistent non-compliance may lead to serious enforcement actions and restrictions on trading in Portugal. So to recap, Portugal applies VAT at a standard rate of 23% with reduced rates of 13% and 6% and lower rates in Madeira and the Azores. Domestic businesses have €12,500 threshold, EU sellers must follow the 10,000 distance seller threshold, and non-EU sellers must register immediately with a fiscal representative. Compliance requires timely filing through the Portuguese tax portal. Thank you for watching this video. If you found the content useful, let me know in the comments, and don't forget to like and subscribe for more updates on VAT and international compliance.